garden gnome had normal size penis. Whoop, whoop. They came in the back door. Have the broadcast. Anyway, forgive me. I'm a fan of Ron Burgundy. I was joking with my wife that maybe I should start out doing some of his stuff before he goes on to a news broadcast. Um, so I make myself laugh. I hope everybody's doing well. Happy Tuesday. I'll get out the little disclaimer and kind of go over that. Anything I talk about today, please, this is not financial advice. I'm not a professional financial advisor. You guys need to do your own research when making any financial decisions and reach out to your own financial advisor. You shouldn't really be listening to me or anybody on YouTube. You shouldn't be buying a stock just because somebody on YouTube talks about it. Anyway, hope everybody's doing well. Just getting started. Today is early on Tuesday. Let me see if I have a way. I wonder if there's, let me see something here. Forgive me. Oh, I don't want to. It's a shame that I use my phone to do this, and maybe I need to get a camera one day or figure out how to do it on the computer. Anyway, the markets are doing incredible now that our fearless leader said the war is over, which I find kind of comical because there still seems to be, a war going on. So I don't really know that it's over, but it's amazing how the markets reacted. I think for those of you who've watched the oil trade kind of play out, um, I was watching somebody who made a lot more sense of it, especially from my experience on the floor, which is it was a massive trade that somebody got margin requirements out of. Odds are that was a way overextension because of other things going on in the markets, not just the geopolitical and not just the Strait of Hormuz being closed and all of that stuff. It was probably somebody who had a rather large short position who had gotten stuck on Friday and was forced out on Sunday night. Because I want to say oil got up to like $120 a barrel Sunday night, even though by Monday morning it was closer to like, I don't know, I think it was 1.5, 110. I don't know that it ever got um, much above there. So either way, I guess the markets are kind of markets and move how they move. And I'm a little surprised it got as far as it did on Sunday night. Um, but interesting trade. By the time it opened Monday, seemed pretty obvious that it was a good bit lower. So or that it wasn't going higher, and then today it's reversed again. It'll be interesting to see how it plays out because I'm not sure that the pullback seems like it's gonna scare like it seems like to me that it's still gonna have to have a bounce up and make people nervous and uncomfortable about what's going on in the market. It still has a tendency to squeeze people out. I'd be a little bit surprised if it just goes straight back down from here. But, really anything is possible with those types of markets. It's nice to see the way that the equity markets have been behaving, um, opening way lower on Monday and then reversing. I know that it was kind of silly how it reversed. Hello, Lily. I'm glad you made it. Um, Hi, I'm Mark. Hey, Mark. Oh, you did a live. That's great. Oh, you made it to mine. That's cool. I'm really glad you made it. I kind of like these small. I know it sounds so stupid. Everybody has these aspirations to have like a zillion followers, but the guys who I know who have a zillion followers, when the comments come up, like they almost have to hire somebody to go through the comments, and I I do this because I enjoy it, not because I have to. So I'd almost rather have a small community where I can chat with the people who make the comments and maybe respond to some of their questions. So Mark, I'm really glad you made it. That's cool. Lily, I'm glad you're here as well. Um, it was nice to see the way the markets reversed, no matter whether it came from Trump or not. Um, Yesterday was a great day, and to see follow through today is even nicer. Um, I don't know how many of you, and I'll just ramble unless somebody has a question, then by all means feel free to chime in and let me know what stock, or if you have questions about what I'm chatting about, that's just fine too. But so I have a I want to say it was a teacher in high school, but it might have been a professor in college who would talk about the markets, and he said, and this has always stuck with me, that when equities behave the opposite of how you would expect them, that's better information than when they do what you would expect. So I say that in relation to a stock that I talked about once or twice, but I know it's one that very few people pay attention to just because of the market cap and what it is. The ticker symbol is MTN, and it's Vail Resorts, and I got over attracted to it mainly because of the dividend yield, and I'll be the first to admit I'm an idiot for high dividend yields. And it was paying, 6% or a little above, but they reported earnings yesterday, and the earnings really sucked. I mean, they really sucked. It came in at 587 versus $6.21, and then they lowered guidance as well, which, as we all know, in today's market, is like when places lower the guidance, they really get punished. And the interesting thing is it opened up around 130, traded just below that, which has been in the range it's been trading for the past maybe month or so, and then it's just drifted higher ever since. And to me, similar to what the professor or the teacher had said, I think that's better information than anything else. It's a thinly traded stock. Let's see, the market cap is under 5 billion, and it kind of tells me that it was already priced in. If they're lowering guidance and their earnings suck and nothing good is coming out and it opens up on the low and then drifts higher, that's a really good sign. And I mean, the earnings were really bad. So so it kinda cracks me up, especially because for Vail, they're gonna have a couple of quarters where they don't make money or they lose money, and the commentary from the CEO is this was the toughest winter in 30 years because of the lack of snow. So, I'm glad that you're here too. So it's kind of interesting to me, and I'm keeping an eye on it. I would love to see it end out the day around 140, and it's just an interesting stock to me that I really like. I mean, my son started snowboarding, and Vail owns something like, let me take a look and see. I think it's like 31 or 41 different resorts across the country, and even if this was the worst one in over 30 years or whatever he's claiming, I'm sure that they're used to bad weather from time to time. They have to be. So it's like I get it, but it is what it is. 32 resorts across North America, um, and Montana, blah blah blah. I know they have international as well, but they also own some of the lodging and some of the restaurants and everything else. So it's a pretty big company. And the other thing is, I never see them talking about it on CNBC, but for some random reason, not random, I mean, I know their earnings came out, but Jim Cramer was talking about it today and he pulled up a 10-year chart. So let me pull it up too. Basically saying what a waste of time it's been, because who wants to own a company that hasn't been up in over 10 years? And the funny thing is if you expand it out, he's right. It hasn't over 10 years, but it's traded as high as over 300. I'm seeing 323, 332. So it's traded as high as 332, and it's down to $130 a share. That's a big pullback over the past, what was that, since 20, almost 5 years. And I don't disagree with Jim Cramer, but I still feel like it's a bottom because it's trading around 20 times earnings, and it pays a 6.63 dividend as of yesterday when it closed at $134. Um, so so good question. And, Mark, I'll mention about that too. I don't think that Jim Cramer, like, he's a smart guy and he's run a fund, and I don't want to be too hard on him. I know they have like the anti Jim Cramer fund as well, but I think that, like my buddy Steve, who I talk to all the time, he just follows too many stocks. There's only so many you can keep on top of, and you really can't have a good grasp on 1,000 different companies. There's just no way to. If you watch 10 companies pretty carefully, I think you could have a good gauge on them. And then, similar to Mark, who's asking, I see where Jim Cramer just announced you shouldn't be buying NVO. Do you think that means we should be buying more? Sort of. I mean, when there's bad news on companies that I think are decent companies, to me, they're discounted. I'm not going to dive in and put in too much money that's a huge percentage of my portfolio, but I'm pretty sure Mark is saying that because he knows I bought a Novo Nordisk too. They're in the GLP-1 space. I think it's a good spot to be in, and I think they had enough bad news that it seems a little overdone. And if you just, it pays a good dividend unless something changes as to what they do. Uh, Again, I'm attracted to the dividends. I'm happy to own it as long as it can pay out that dividend and doesn't have trouble or need to cut it. Uh, Kind of my point with Vail Resorts. Now, the weird thing is, I've noticed with the war going on and the oil prices and the new Fed chair coming in, which is what I think was all pushing the prices lower. And even that, forgive that I'm bouncing around, it's kind of funny to me because when I look at my main portfolio, I think I'm down 3%, and people are screaming as if the markets are down 20, 30, 40%. So I kind of see it as opportunity. I think people are overreacting because if they're diversified, the markets really aren't doing all that badly. So I think good to have a nice diversified portfolio and not to be oversensitive to how the markets are moving. And if I can get the dividend, and this is where I was going with the war and everything else, but where I'm struggling is the Fed is in a terrible position. They really are stuck between a rock and a hard spot right now. Unemployment is pretty obviously getting a little bit worse. And it's nothing dramatic, it's nothing terrible. If you look at the true the what's it called? The U6 or whatever it is, and the unemployment's a lot higher than the U3, if I'm using the right term, of what the government uses. Basically, the one the government looks at, if you've been unemployed, and I think it's 6 months or longer, they don't really count it. They consider you out of the workforce. I think that's a little bit of an exaggeration, whereas the U6 doesn't do that. And it also includes the underemployed. I'd have to look it up to say for sure. So if some of you know differently, feel free to just let me know. But either way, the unemployment is getting worse, which I think we're all aware of. Companies are firing people, it's making the news. At the same time, inflation is really sticky, and you have to be careful of the oil going higher because oil is inflation through everywhere. So theoretically, unemployment going higher, well, then I need to cut rates to ease things up so businesses can hire and settle that down. Inflation going higher, oh, I need to raise rates because the inflation's going higher and I got to put that in check. So they're really in this tug of war, and you have a new Fed chairman coming into a position where he's in this big tug of war. It's a very tough spot to be in. And then he's got the president on his back consistently being like, cut rates, cut rates, cut rates, which may or may not be the best thing to do. Now, I think oil's going to ease off. And I think the unemployment, there's something interesting going on there that it's hard for me to determine if it's a little over exaggerated or not. And like everybody else, I worry that AI is going to change things and unemployment's going to become a real issue. But let's ignore that for a second. One of the statistics that's really interesting with the unemployment the way it is salaries haven't dropped. They haven't lowered what they're paying people, and they haven't lowered the rate that they're hiring people at. What's interesting about that is if unemployment is getting worse and people are out of jobs, companies aren't altruistic. They're not just going to offer more money for no reason. So if the salaries are staying strong, it makes me wonder if the unemployment is really as bad as the media says it is, or if it's not so terrible. Hard to really know. It's hard to quantify any of that, but it does make me suspicious as to why are the companies still paying what they're paying if the unemployment is getting worse and as bad as the I don't want to say the media, but the data is showing. Is the unemployment really that bad? Maybe, maybe not. Anyway, back to Vail Resorts. I love the price action. I really like the stock. It puts me into a an area of investment that I'm particularly not typically in. And even with the bad quarter, I have a feeling that that's just all it is. And by next year, when the weather's a little bit different and they have a little bit more snow, they'll be selling more ticket sales. But they also have this Epic Pass, which essentially is a annual pass that lets you go to, I think, all of their mountains and probably gets you discounts and other things if you're getting it. There's a good percentage of people who just get the Epic Pass because if you live in an area like Colorado or somewhere else, there's huge value in just buying a season pass. If you're me and you travel there just for like a vacation, you're the one totally overpaying and getting the worst deal. Either way, let's take a look at some other ones that I was looking at as well because I love how the market's behaving. We have oh, look, it's fallen off a bit. The Dow is only up 127, Nasdaq's up 62, and the S&P is only up 7, and that's really just in the past 15 minutes that I've been doing the video. So I guess I've scared off the market a bit. Let me take a look at some of the others. So what I've noticed as I'm looking at a bunch of the different stocks is it seems like it's rotating back into the Mag 7 and coming back out of the defensive stuff a little bit. And if the economy is doing okay, I would expect that to continue. I would so in my trading account, I put a nice big position into Amazon because I feel like the defensive stuff and being in the news has gotten a little overdone. Along the same way, like I always feel that you want to do the opposite of what's going on the TV. So as of late, they've been talking about the big rotation out of the tech stocks into the defensive stuff. Well, I don't want to buy the falling knives. I'm still very scared of the Adobes of the world because, to be fair to what I started to get into before with the AI stuff, I really do worry that AI is changing our world and it's going to disrupt a lot of industries. And I don't want to buy the falling knives and take the risk that Adobe's out of business. And I'm not predicting that they will be. I'm just saying that the narrative does make sense as I recently started playing on ChatGPT. I'd like to play a bit with Claude, but I don't want to download it on my computer. And I don't know that I really want to go get another computer to play with it. But the things that I've read. When I say read, half the time that's watching videos on YouTube about how Claude really reads everything on your computer. I don't want it on my main computer or my phone or anywhere else where I have accounts and anything that's personal. I just don't want it that embedded into my life. Um, but I would like to play on Claude a little bit if I have an opportunity. I've been using ChatGPT a little bit more, and now I see what people love about it so much. It's very impressive, and I worry how that's going to impact all of these companies. Now, Lily's asking, what about Amazon? I'll make sure to discuss Amazon. It's one of my favorite stocks to talk about. And like I said, I put a large trade on it. The reason being is I think this rotation is overdone. I think you'll likely see money start coming out of the defensive stuff now that it ran and people were getting out of what they call tech or see as a little bit more risky, and started moving into the Coca-Colas of the world. And, the reason I can see it is I have Conagra and General Mills as well as Amazon and Meta and some of the others, so I can see the rotations happening. But when I hear the news on the TV, I feel like that's almost advertising. And when they talk about everybody getting in the defensive and you see people rushing in and the price is going higher, I want to be the guy selling to that stuff. Now, it looks more broad based to me. What I saw earlier were like, I was very excited to see Starbucks finally got above $100 a share. I've been talking a little bit about that. And yeah, and Target's showing holding strong above 120. Woo-hoo, Target, as much as I joke. But I watched this guy who was interviewing Chris Canella, who I'd never really heard of. But I guess he's this trader who turned a small amount of money into a huge amount of money. And he was discussing Amazon and his theory as to why he pictures it doubling or possibly tripling over the next 2 to 3 years. Now, I like Amazon already, so he didn't really have to sell me on it because I'm already comfortable with the company and I'm okay owning it whether he's right or wrong, if that makes sense. But his theory was he's looking for companies that are in the position to lower their employment by more than anyone else. And between Amazon and the warehouses and everything else, and all their drivers, that they're in such a position to get rid of about 60% of their workforce to be able to save all that money and optimize the business by using AI. And it was a really good argument, and I see his position on it. The other point was it's very hard to compete with Amazon. It's going to be very hard to disrupt their business. It's not like OpenAI or one of the others can just come in and have that infrastructure to be able to make the deliveries and do all the things that they're doing just at the turn of a hat. Is that a term? I don't even know if that's a term. So not only did he like their ability to kind of streamline the employees and save all that money, he also sees the moat on them that it's very hard to spend the billions of dollars that one would need to be able to create the environment that they already have. And I know at least for us, and I assume it's the same for you guys, I would say once a week, if not more, we have something coming from Amazon, small, big, whatever it is. Recently, like today, I have some drinking glasses that I ordered because I've had these stupid plastic cups for years, and I'm just realizing they're beginning to get old, but I like a bigger glass. Anyway, Amazon is so convenient, it comes right to your door. If you're like us, I've even set it up with my garage at this point, so I don't have to worry about somebody stealing it off the front or the porch or me forgetting that it's in the mailbox. And I'll get a little notification. My phone will show like your garage was just opened by Amazon. And I just think they're such a great company, Lily. And then you have the Amazon Web Services and all of their ancillary businesses. Excuse me, a little bit of my coffee, which is probably why I'm a little bit slow today. It's just one of those companies that I think is so well diversified, such a big moat, and they're growing at a nice pace. I don't see them as something I'm just going to make $1 trillion on. So it's a little bit of a weird thing as a trade, but it's a comfortable trade because I really do think it could be trading 300 in a year or so, which is an incredible return. Um, so I have a nice big Amazon trade that I'll sit with for a while. So, do I think energy stocks will be coming back down after the Iran incident is over? I sold ExxonMobil, Kinder Morgan, and Duke Energy. Do you think energy is a good play with AI? That's a great question, and forgive me, Mark. Like that's a really great question. That I hate to say I don't know, and it depends, but similar. Now I have Chevron. Um, Primarily, I have NextEra Energy, but that's a little bit different. Let me look at ExxonMobil. I assume they did the exact same thing that Chevron did. but since you have Exxon, and yeah, it looks like the same thing, and they're down a little bit today. If oil holds, excuse that's my voice. Maybe I needed to do more of that the Ron Burgundy intro to get my voice right. If oil holds above 70 or 80, I think these stocks will still do really well, the Exxons of the world. And at least me personally, I don't get in and out of the Chevrons and the Exxons, but I've owned it for years. I don't know what I would do if I had it for a shorter amount of time. I mean, their PEs are always just fine. Sorry, I'm looking at them, and I mean, the chart for sure looks like maybe a little overextended, but their earnings should improve with higher oil prices. And they're just companies I want to own for 10 years. So I tend not to get in and out of them, but that doesn't mean it's not necessarily a good opportunity to get out and maybe pick it up a little bit cheaper. Let me just look at some of this stuff. And what bugs me is at this point the Exxon dividend is 2.74. And for me in my life, this isn't necessarily you, Mark, which is why, like, when I make the disclaimer, it really isn't just a disclaimer. It's because everybody's in a different situation or position in their life. I, I'm over attracted to higher yield because I'm hoping to live off of dividends over the next couple of years. And 2.74, if I were getting into something, is on the lower end. It's extremely safe. They're using less than 60% of their free cash flow to pay that out, but I'd rather get a little bit better of a yield, and there's probably other opportunities. The thing is I think that between the energy demand that AI is obviously putting, at least that's the narrative in the news, I think all energy companies are in a really good position. I think based on where I typically see Exxon trading, they're more expensive than usual, but that's why I said I don't really get in and out of it, but I could understand if I were looking to the yes, I think this is probably a decent area, and I think you might have an opportunity to buy it in lower, but I'm not sure. You said market. So Tom is saying, you said market would drop and market just dropped. I'll do that again. No, I noticed that it had dropped. Like, I don't know what happened. Like, when I started the video, it was like, whoa, that really happened quick. I'm hoping it doesn't drop. Um, it looks like, sorry, Mark, just to go back to Exxon, but they're very small. I don't see any insider activity that looks exceptional other than there was. Is this a ward of options or is this, yeah, yeah, it's not actual purchases. Nothing that looks like it's not. Everything on here looks like that it's something that's like pre-done that they do every quarter or something. So nothing interesting there. Um I wish I had control of the markets like that, that Tom. I hate to admit I would trade off of it. I mean, I wouldn't be shocked if Trump does. Like, imagine having that ability to say that the war's over and know that the market's going to go straight up and be able to take advantage of that like that. Um, let's see. Nvidia's had an interesting move today with what's going on with there. And then let's take a look at Novo Nordisk again because I've never like delved into it too much. And since Mark was joking about Kramer and him saying that you shouldn't be buying it, which may be why it's down a little bit, but unless something's wrong, and this is what I was attracted to, which is why I'll look into it and I'll even put it into Chat GPT as well, because I like using it. Um, let's see. Please do a stock analysis of, I know it's, oops, sorry, my screen popped open. Nordisk stock ticker NVO. So we'll see what they have to say, and I'll look at the numbers a little bit. But on the snapshot screen when I look at E-Trade, which is where I like originally will look at most things. It's showing an 11 PE and it's got a dividend yield of that's not oh, it's only semi-annual. If this is right, it's only 3% of it. Good morning. How you doing? Forgive me, I forgot the name. I know you told Sam, is that right? Um, I didn't realize it was semi-annually, if that's right. I thought it was closer to a 6% dividend, but if what I'm reading is correct, it's only a 3%, but that's fine. I'm not super concerned. I really do like the 11 PE. Um, and let me take a look at and them and Hims, they're not having the lawsuit anymore, which is why Hims is shot up, which I think is probably a good thing, and they'll probably partner to some degree if the lawsuit's over. So institutional ownership is only 8%. I wouldn't mind seeing a little bit more of institutional ownership because that implies they don't see value in it. Um, 3% dividend, it's only using 50% of the cash flow. So similar to Exxon, for me personally, even though I bought into it, but that was a mistake. I thought it was a 6% dividend. I probably still would have just because the news was so negative and everybody was hating on it. Um, but let's see, inventory turnover looks okay. Price to earnings 11, price to sales, price to book. It still looks very attractive to me. Gross margins, I mean, this is crazy unless because there's just more competition that it's going to change. Their gross margins look like a tech company at almost 81%, and their net profit margin is 33%. So even if they end up getting squeezed, that's just impressive and amazing. But let me take a look and let's see what ChatGPT says because I like how they analyze the companies and the information they use. So Novo Nordisk is a Danish pharmaceutical company, the GLP ones, specializing in diabetes, obesity, which fits what I like too, and rare endocrine diseases. That's interesting. I'd like to see what it does. It's blockbuster drugs or Ozempic, which we've all heard of, I assume, Wegovy, and then their new oral one, which they're coming out as well. Um, the obesity market is projected at over $100 billion, so it can be a few companies very profitable. The competition is Eli Lilly, which has the Zepbound and Monjuro brands. Let's see, revenue growth. Approximate recent performance revenue growth is 30% annually, with operating margins of 44%. Return on capital is extremely high. So these are all the things that look really great. Oh, good. I'm glad I remember the name properly because my memory usually sucks. Um, Very low debt, massive free cash flow, high margins. So the fact that the markets are just beating on it, like I'd be curious about the next earnings and how they look, but it's just silly. Like that's all beyond attractive. And along with the others, it was such a high flyer for some time. Sometimes when they reverse, they get overdone, which is kind of when the news was negative and the stock was getting pummeled. It became attractive to me. Um, Dividend growth is strong, double-digit history, payout ratio 40 to 50%. So if that's able to continue, you might see it just keep going. Approximate valuation is now typically 25 to 30% PE, and it's way lower right now, which to me again says attractive pricing. Let's see if it says what the negative risks are. The risks are the competition with Eli Lilly. So which is what I think they overreacted to. So when they did one of their drug tests, it didn't perform quite as well as they were hoping. But my attitude when that came out and the stock got clobbered is I don't know how many of the doctors pay such close attention to that. I have a feeling that they pay more attention to the salespeople that are coming in, offering them whatever they're offering, or building the relationships like any other sales business. So whether it's some cute girl going in that the doctor likes, or that they offer them more free samples than the other. The doctors that are going to push the Eli Lilly products versus the ones that push the Novo Nordisk products is probably not because of the study that came out that didn't have the performance they were hoping for. Now, if the performance was really bad and not just a little bit worse than what was expected, that I understand. But when I heard them talking about it, it was like it still worked just fine. It just wasn't what they had hoped it would be in terms of performance. So I don't know. And sure, I'm guessing that Eli Lilly is going through the same type of thing. So the bear case, which is what I'm more interested in, it's easy to argue the bull case, is the competition with Eli Lilly, the regulatory pricing pressure, and the high valuation. I don't really see a high valuation at this point. I have a feeling this information's a little outdated because it's saying it's no longer a cheap stock, but part of why I bought it is it sure is. Um, so I don't know that I'd be buying more because of Jim Cramer's opinion, but to me personally, anything under $40 a share looks really attractive to me. Let's see if the insiders are doing anything. Wow, nothing in either direction. That's interesting. Over the last 5 years. Did I hit the wrong button? No, nothing. Hi, Mark. Hope you're doing well. And let's see earnings estimates. Yeah, it's a beautiful chart going up and to the right. So, unless, they're estimates, which are just estimates, everything to me on Novo Nordisk looks great. I don't know if any of you have a stock you want me to look at. I actually was looking at SL Green earlier this morning, and I kind of liked how that was looking. Uh, I think that I don't really have any REITs, partially because I have a investment property, so I kind of figure that's the investment in the real estate. But I've thought of buying either Vici Properties or SL Green. And when I was looking at it, and both for the similar types of information, which is the economy has been so negative on it, I penny stocks look really attractive to me. Argenta, for example. I don't really look at penny stocks. I'll take a look at it. Just you might have to remind me. Well, I can scroll up and see. Um, might be interesting. What's the story on them? I mean, usually penny stocks have something that like they're in some category that I'm on. Like there's something that sounds really cool about them, which is what makes it kind of a gamble that somebody might make. I'm old, so I don't. I like the gambles are a little few and far between and small bets, but I'll still make a small gamble. Um, but when I looked at SL Green, like they're really struggling. Oh, speculative mining. Now, when you say mining, like for coal and for gold and silver type of mining, or do you mean like crypto type of mining? Just curious. Um, Sorry, I got a little my head started. I have a tendency to go all over the silver. I like silver, and I think that there's still upside potential as far as I'm concerned. Um, I have a little bit of silver, and I, I I know that it had a huge pullback on that day where it got a little ahead of itself, but I think it could have a long way to go, and I'm not a doom and gloomer, hide under a rock type of personality. I've just watched Silver for so many years that it's still lagging in my mind, even where it is. You know, yeah, yeah, Lily, I do. I mean, I think of Silver, like if you look all the way back at a chart when the Hunt brothers tried to corner that market, after they were done, the market just died. And I mean, I've been watching silver since it was, 3, 4, $5 an ounce, and just kind of sitting around doing nothing while gold was drifting higher. And then if you go to like the late 90s, early 2000, when gold was finally bottoming out and really reversing, silver took a really long time to go from like $5, $6 to 20-ish before it made a new top around 30 that looked like a spike, but it was such a lag that I really think that all the metals could still have a long way to go. But I am not Peter Schiff. I'm not like one of those, perma metal, just it's going to a million and everything else in the world is just stupid. Um, but I do think, um, yeah, I'm not surprised. Uh, Gold silver ratio is 8 to 1 until recently 100 to 1. Wow. But even Lily asking about platinum, I I think platinum, like, I started liking platinum when gold became more expensive than platinum. Now, I'm beginning to understand that better, which is nobody really uses platinum as much. It's not as desired in terms of like the jewelry market in a lot of ways. But it's funny, if you go to a jewelry store, you're still going to pay a premium for it, and silver actually has a use case. So does platinum. And I think as we've moved towards electric vehicles, the catalytic converter does, they're not using quite as much platinum, and it's just a little bit different, and we don't have that same demand. And not that many people pay attention to platinum, but it is such a thin market. uh, Maybe I'm just that stubborn, because I think it was like, I don't know, 2002 or somewhere around there, where gold actually started becoming more expensive than platinum. And I was convinced that that was a fluke, and one day it would go back to where platinum was more expensive. It doesn't appear that way. I mean, I've been wrong for over 20 years, but I do feel like it's such a thin market that we could see it. And you could see just platinum just explode, because nobody gives a shit about platinum. Nobody pays attention. So if it just started running, it's not like people would come late to the party. So half of me wonders if we'll just see platinum at some point become, I don't know, $10,000 an ounce, while gold's drifted up to 6 or 7. And I know it sounds absolutely crazy, but I say it more because that market is just so thin. It wouldn't take a lot for it to really just start going. Uh, and like, again, maybe I'm just that stubborn about platinum, but I do like platinum. Oh, and now that I'm looking at it, I made a comment about there's more above ground gold than silver. Yeah, look, I it's part of what I like about silver, Mark, is there's a demand for it. It's being used in all the solar stuff. It gets used in other things. And the only negative with silver is, to it's so heavy. Like, if you look at a few $1,000s worth of silver, although it's better now, you need like blocks of it. Whereas, 1 little ounce of gold is 5,000 now. So it actually, it's a small piece for a good amount of value, which adds to it. And like, I like all of it. I find Bitcoin really interesting. I don't know if it'll go to zero, or if it'll go to a million, or if it'll sit around where it is. But I see real value in a lot of these things that are alternative, value of assets, and or stores of credit, or whatever you want to think of it as. I don't know that any of it is better than another. A dollar is still a dollar. I think that eventually we're gonna be going more digital, but that doesn't mean we'll be getting rid of the dollar. But I do think some of the other countries might be what are pushing away from it, pushing gold higher to deal in oil and gold. So anyway, I started to notice earlier, it's kind of funny, Starbucks has now drifted above 100. I don't know if you guys had seen me talk about it. And Tom, I'll take a look at DGRO. I'm not super familiar with it, but it's been mentioned a few times. So I want to see what ETF, like what's in it, what the yield is, and everything else. And I'm sure it's pretty good. If it's a covered call spread, I'm not or covered call one, I'm not super interested in any of the covered call ones. But that's just my own. When I traded, the guys who trade for some of those companies, like they're not the best traders. People assume since somebody works for a bank, the bank knows what it's doing and the fund is a good fund and whatever else. But I'd rather sell my own calls if I wanted to do that. I don't know if it is. I'll take a look at it in a minute. But I was talking about Starbucks recently, mainly because it's finally gotten to the point that nobody's paying attention to it, which is when I like things. And it's drifted from like 75 to 100. Nobody's talking about it. They have a new CEO who was the one who took Chipotle from zero to a gazillion. So I love the CEO. I like that they were able to get rid of some of the problems they were having in their China division. And I like that the stock is drifting higher while now people are talking negatively about it. And the YouTubers who I was watching who saw it as this great value, the few that I watched, like they finally gave up on it, started talking about how it's one of the more likely that's going to need to cut its dividend. And I said to one of them, I go, this is not, I find that for the most part, a stock price is not going to drift higher in a company that needs to cut the dividend. Somewhere, somehow, the stock personality and the price action is more important than the analytics that we're able to do by pulling up the financials. So when I don't dig into financials, it is not a lack of not wanting to or anything else. It's that I think it's all BS. I think that whatever is going on is going to be more obvious based on the valuation of the stock and the price action than the data that we're going to be provided. So, yes, Starbucks is using a large percentage of its free cash flow to pay the dividend. But if it was in jeopardy, I don't think the stock would have gone from 75 to 100. I think it would have been still stuck at the lows and just doing terrible. And the fact that the people I was watching finally gave up on it is part of what I like about the company. So it's nice to see that it finally breached through 100. It is not like how I was with Target, where I was banging my hands on the table. That was way different because 50% of free cash flow, a PE of like 8 or 9, and a company doing just fine that the news hates is super attractive to me. And that's why I said, like, even Novo Nordisk, if the information's right, I'm not as comfortable with them that they're as well diversified, but same concept. All right, let me take a look at DGRO and see what that one is. All right, iShares Core Dividend Growth ETF, and it pays 2%. So yeah, but let me see. So it says it's Morningstar's US. Hey Rudolph, glad you made it. Morningstar's US Dividend Growth Index. But why is it only a 2% yield? That's interesting. I would have expected it to be a little bit higher. It looks like the stock itself has performed exceptionally over 5 years and over a year. And so I like that. Let's see, top 10 holdings, Exxon, Johnson and Johnson, AbbVie, so good companies. Microsoft, Merck. So yeah, and look at that. Averaging over 10% a year. It's a great company. It's probably worth being in, Tom. Um, I'm trying. So my goal with the dividend rotation, yeah, that's what I'm seeing. The performance is phenomenal. Uh, so my goal, part of why I switched the channel and what I'm rotating towards, the reason I called it dividend retirement is my goal is to work out a growth in the things that are paying a little bit better dividend. I don't expect it to happen anytime soon. And DGRO looks like a phenomenal company. I'm in no rush. It's not anything I need to do immediately, but I've been selling calls against some of the growth stuff that I have. And as it gets taken, I'm looking to move it into things that pay dividend, but I'm hoping to average a 4% to a 6% yield for the overall portfolio. Now, I can have something that gets a 2% yield. That's just fine as long as I have something to balance it out to get me in that range. This will sound sick and twisted, but the concept is if something happens to me, it makes it very easy for my wife and my son to be able to just quantify what comes in over a year. It won't be monthly because most of them pay quarterly. I could care less about monthly distributions or any of the other stuff. I sure don't want any of those crazy yield max stuff, but I want them to have an ability to have a general idea of what can come in over a year to be able to budget accordingly and then just be able to live their lives. I know that it's kind of nutty to think that way because I'm sure not that old, but it also would make things nicer. Like I'm spending less time at work and more time doing this stuff and hanging out with them, which leads me to really the reason I do this stuff is I'm sure there are other people in similar situations looking towards retirement, and even those that are way earlier, that maybe I can give some concepts and ideas that there's an ability to really live off dividends and be able to budget a life where you don't have to worry about the ups and downs in the market. Now, if I can do that spreading out over somewhere between 30 or 40 equity positions, that I don't worry if a couple of them do poorly or even potentially go out of business. For example, right now, one of the stocks I have in my account is Whirlpool. My buddy who pays way too much attention to every single individual one and all of his stocks and tries to trade them too much and whatever else is like, well, why would you hold on to it? I will tell you kind of my comment about Starbucks. Whirlpool does have me concerned. However, it's a small enough position in the account. If it goes to zero, I won't be happy about that. But it's not the end of the world. There's enough positions that not any one of them is going to be that bad. But I will tell you the way that the stock price is behaving in Whirlpool has me concerned. They just sold enough stock to raise $500 million, if I remember correctly. And the stock price, like that's the type of thing that's a bad enough news. It should finally get out there and possibly make a bottom. And it just seems to keep getting worse and worse in terms of the share price. It would appear that they make plenty of money to be able to pay the dividend that is now 6%, but I own the stock from higher, so I'm getting 4% ish. Um, and that's kind of what I mean about something about the stock price is telling me that the information that we have is not so wonderful, whatever that is. Like at some point, if everything is going just fine, well, people would be buying the stock and it would have bottomed out and that would be the end of it. Let me see. Sorry, it had me curious. So I'm looking at some of the numbers here. Yeah, I don't really see a whole lot of insider information either. But let's take a look. So, because Whirlpool's been getting crushed, institutional ownership is good, but okay, there's a 20% short interest. That's a concern. That tells me somebody thinks the company is going to continue to do worse for some reason. Its current payout ratio is 95%. So the dividend after they've already cut it is still in jeopardy. That's a pretty high payout ratio. So it's possible they might have to cut it completely or they might have to lower it yet again. Earnings per share is $5.63. It's got a annual dividend of 360, so I'm not really sure. They must have some other expenses to make the payout ratio so high and some debt. Uh, let's see. It's claiming it's at a 10 times earnings, which I'm guessing is true, but I'm guessing their earnings are getting worse. And its net profit margin absolutely sucks. So Whirlpool doesn't look great, and the stock price bothers me. That's kind of, let's take a look at Starbucks and see it to get a comparison. Because I'll go straight to their payout ratio. Let's see, out of curiosity. Yeah, its payout ratio is showing 204%. So what that's telling me, if the stock price is drifting higher, is they've had a one-time expense or something else that's going on. But in the same breath, the short interest is only 3.7%. So why are they not shorting Starbucks? Why does it have a 200% payout ratio, yet the stock is drifting higher? Let's see, and similar net profit margin of 3.63. So it's not like on the books, and it claims it has a price to earnings ratio of 83. So while I don't want to take away from a lot of the guys who do some really interesting digging into the financials, but what I'm saying is there's a reason that the stock is behaving the way the stock is, no matter what the financial says. So just be a little bit cautious. Again, do your own research. But I tend to just pick companies that have good names and pay attention to the stock price, because I think I get more information based off of the fluctuations and what actually goes on with the stock versus by digging into the financials. And I think the financials can cause you to make poor decisions. Not get out of something that's behaving poorly, or buy into something that isn't doing great. Like, if you totally go into the information that you're being provided from their accountants, I have a feeling they're pretty good at setting things up in those numbers to look the way they'd like them to look. Now, they are not doing anything they shouldn't be doing. I don't want to imply like that they're lying in them, because I don't believe that. But I also do think that there are ways to make the books look the way you need them to look. And in the meantime, if everything was just incredible, the people on the board would be buying the stocks along with their family members, supporting valuations. And I'm not saying they'd go in and start selling the stocks, but if things are not going well, maybe they're just taking their salaries and investing in other things because they make plenty of money to be buying other companies. Now, they're also going to be talking to analysts, they're also going to be talking to family members or whoever else, which is why I think whatever actually goes on, you'd see it in the price action. So I get overly sensitive to price action more than I get sensitive to what the numbers are looking at. Whirlpool, I would think competition is an issue for them. So, Todd, here's the interesting thing. Let me pull it up. They're almost every company in that area. Like, if I remember, they own LG, they own this one, they own that one. So let's see, whirlpool.com. Because I would have too, but I think that they own it. I think it's just that what I think my understanding is, during COVID, they just boomed because everybody was moving and everybody was buying all the appliances. My guess is it then slowed our brand. So let's pull them all up. And I'm not sure that they adjusted accordingly. So let's see. Does it just give a list? It's easier to read. I clicked on our brands and now it's giving all the products. Choo-choo-choo. Oh, it wants me to click. But Whirlpool, KitchenAid, Maytag, Amana, Gladiator. I thought there were more. Let me see if I can just pull up Whirlpool brands, because I used to think the same thing. And then I was like, oh my God, they own everything. Okay, Whirlpool, Maytag, KitchenAid, Genair, Amana, um, Never heard of them. These look like, and then a bunch of foreign ones too. I thought they owned LG too. Let me see. But they own a good bit. Maybe LG is does does Whirlpool own LG? Nope, they don't. LG is an independent out of Korea. So LG is their competition. And let's look up who their competition is. Who is LG's competition? Samsung, Sony, Panasonic. No, who is Whirlpool's? Samsung, LG, Electrolux, and Bosch. So maybe it is some competition, but they're a big. A lot of them are their own brands too. But I think things have just slowed since COVID. I think they got a huge rush of orders. How are people in your state living with new administration? Give us boots on the ground experience. The new administration doesn't impact the people in Nevada for the most part. Nevada is, excuse me, at least from what I notice, seems pretty non-political. It's more in the news than anything else, and I find it all interesting, but I don't find much changes in Nevada. Um, but I also think that it doesn't matter red or blue or whatever. Like when COVID came around, and I remember there were like threats of like people rioting or whatever. That just doesn't happen here, which is part of what I like about Nevada. Somehow it gets out to whomever is thinking of doing whatever they're thinking of doing that you better not. And somehow the casinos still run the town in some degree. But it's not like anything changes in Nevada because of anything to do with the administration. It's more passing conversation, which is part of what I like here. Is people don't get, I moved from Chicago. I grew up in New York, but then I lived in Chicago, and I listened to my brother. And in Chicago, it's very left and very blue. Now, I don't care which side. I don't like either of the extremes, and it just gets a little too extreme. So similar with him, he's not really strong one way or another. And I think Trump is funny. Um, I'm sure he's not funny to a lot of people, but he's kind of a character to me more than anything else. So I don't have much of an opinion on it, and at least out here, it really doesn't impact a whole lot. And we don't have state income tax. We don't have any of the riots. We don't have any of the people running around. Eh, I kind of even wonder in the states that that's going on as to how bad it really is, or is it just the media pushing out the media? Like I said, all the AI and all the other stuff that I've been watching, what I'm recognizing is at this point, people are getting individualized news. Like the news that one person receives is not the same as what I receive. And it's basically off of the algorithms that the systems are picking up as to what they think interests us. So, I don't know. I think that stuff in most countries is a little overblown because that's what's going to drive commercials and people viewing in than any reality. So maybe I'm wrong. I mean, whether it's up here or in the comment section, if people watch the video, by all means, make a comment. Let me know. Is there really crazy riots going on? I mean, I saw something on one guy's channel who pops up that there was a protest in New York supporting it wasn't supporting like the Palestinians, but it might have been with the people like the Iran or whatever it is. And somebody who was should have been in the crowd who dropped a bomb and tried to kill people. Again, like, that's just the information I got, and when I saw it, it was, like, all so silly because it's like he's dropping a bomb in a group of people that are on his side, so to speak. So, it's all such nonsense that I don't even know if it's a reality or if it's just news media. Now, I searched in Google and it does appear to be true. So I'd be curious what Mom Donnie has to say. And is he supportive of the people who are fighting for his beliefs, meaning Mom Donnie's beliefs, or is he going to defend the people who did the attack? Because he has a tendency to do that stuff and defend criminals, which I find rather weird. So I think a lot of what's going on is rather weird. Uh, Makes me think I should just move to Japan where they don't have a lot of it. Anyway, it's a little after noon. I'm gonna head out unless if anybody has additional questions, by all means, feel free to chime in real quick. Otherwise, we'll call it a day, and I'm gonna go watch the markets close. And my son's homesick, so I'll go spend some time with the family. And maybe One Piece is starting this next series, and he likes that stuff, so we'll probably go watch that on Netflix. Um, I'll see you guys next week. I'll post some more videos, and I hope everybody has a great week and your portfolios do exceptionally well. Have a good day, guys, and thanks for stopping by. Bye bye now.